It's the last quarter of the financial year, and if you are an NRI, you must do these 5 things before 31st March to stay fully compliant and stress-free. Let's talk about point number 1, which is paying your advance taxes. So if your net tax liability after deduction of TDS is over by 10,000 rupees, then you must ensure to pay advance taxes by 15th of March. If you miss this due date, then you will have to pay 1% interest penalty every single month. Now let's talk about point number 2, which is checking your AIS statement. So log into your income tax portal and download the annual information statement. This is your income as per government records. Catching the errors right now would prevent the income tax notices later on. Now let's talk about point number 3, which is $1 million transfer limit. So the annual limit from your NRO account is $1 million, which resets every financial year. So if you have any large sum of funds planned to be transferred abroad, then use this year's quota before it resets on April 1st. Now let's talk about point number 4, which is the DTA compliance. Now to avoid double taxation on your Indian income, make sure that you upload your tax residency certificate and your form 10F on the portal. This is how you claim your lower taxes legally. Now let's talk about point number 5, which is the counting of your days in India. So it is not always the 182 days rule. Sometimes even staying less than 182 days can trigger your residential status. And if you become a resident, your global income will be taxable. With that said guys, March 31st arrives sooner than you think. Now save this reel and share it with your friends. And please read the description for full information.